Hi everybody. So as you can see from the slide and as Laios introduced me, my name is Andrew Cook. I've been at Bloomberg for about 5.5 years and I come from our trading and analytics department. Today I want to tell you a little bit about how we use RabbitMQ in our trading systems and in particular some unique strategies that we've used for managing our RabbitMQ resources. So just to get this started, here we go. I wanted to start, and this talk is going to have two main sections. I mean, first I kind of want to talk a little bit about just how we actually use RabbitMQ, maybe an interesting industry use case for folks to learn about. And then secondly is more sort of the particular systems that we've built to manage some of our resources, maybe something a little bit new to people. But yeah, so trading systems, right? Sounds pretty straightforward. It's probably similar to what you think. We provide sort of a premium service on our product, the Bloomberg terminal, to allow people to trade whatever they want, essentially. And in my team in particular serves one aspect of trading called order management systems, or OMS. So first thing, what is an OMS? This is kind of important to understand. So as I just said, an OMS stands for order management system. It is our offerings at Bloomberg are called AIM on the buy side, which is essentially hedge funds, other asset managers like that. And on the sell side, investment banks, et cetera, our offering is called TOMS. The best way to understand an order management system is by understanding the consumer products that are equivalent here. We have, especially in the US, we have Robinhood. That's a very popular app for managing your assets, for trading stocks and such things. And my understanding is that in the UK, y'all have something called Free Trade, which is very similar. These are order management systems. Really, the only difference between how these work and how Bloomberg works is that Bloomberg operates at the enterprise level. And our clients do much larger volume trades and often very different kinds of trades than what you might find on these apps. One thing to understand is, especially in which you will understand if you've used these apps, is that order management systems are position oriented. So you want to know, what do I hold right now and what is it worth? Right? So you can see your positions, you can see how much cash you have, you can see what sort of stocks, maybe what kind of bonds you hold. You want to know each day, how much money did I make? How much money did I lose? I think that you often see the numbers maybe in red and green to see those sort of important pieces of information. And especially for Bloomberg's order management systems, the sort of features that we provide beyond the consumer products are advanced risk analytics, right? What sort of exposure do I have? Do I have too much exposure to certain markets, to certain kind of assets? I may want to adjust my portfolio if I'm overexposed to certain things. Pricing can get really complicated. You do have the public market for things like stocks and equities and other publicly traded assets, but there's also a lot of over-the-counter assets and maybe complex derivatives that are actually hard to price and hard to understand what it is. That's part of what we offer from our platform. And of course, a lot of other analytics, a lot of other fancy sort of models to help people in these large financial institutions make good decisions with their money. And then finally, I think the most obvious thing is called an order management system, because you're making orders for trades. You're saying, hey, I want to buy 10 million, like 10 million shares of IBM or something like that, or I want to buy a bunch of Tesla bonds. You put in the order, and then something on behind the scenes will resolve that into actual trades. Another example of the kind of thing you might find in an enterprise order management system like Bloomberg has is certain execution rules, right? Maybe you have certain compliance checks. You can set sort of rules for saying, I want to put in an order at this price for this stock. It's valid for 3 days. This is even something that you see in the consumer equivalents, but as you can imagine, with Bloomberg, we have a lot more beyond that. And definitely one of the enterprise offerings that we have is certain compliance checks. So not only depending on what country you're in, what sort of regulatory regime, but also even just within your company, you may want to set certain rules. You don't want to let every trader be able to trade sort of wild amounts of money. You may want to put restrictions on certain things. And these here are just a couple of screen grabs that I took showcasing what different parts of our order management system looks like at Bloomberg. The one sort of on the upper left, that's the screen that's sort of how we enter trades. You can enter different fees, you enter the amount that you want to trade. The bottom right thing is where you may actually look and see all of your trades that you've made for the day. We call that a blotter. So you may open up the blotter and see, hey, I made all these trades, here are all the different things that I did, the buys and sells, and you may get certain analytics on top of that as well. You can see some sort of fancy pie chart here. So that's a little bit of an idea about what our business actually is. Whoop. So next I want to talk a little bit about our scope. What sort of problems are we dealing with as a business? So first of all, maybe as you can already gather, we have multi-asset trading. And this can be highly complex data. You can trade almost anything on the Bloomberg trading system. So not only things like stocks and bonds, but also really complex derivatives, things that you actually structure in the Bloomberg system itself. Cryptocurrencies you can trade on our platform. A bunch of assets that y'all might not have even heard of, but which investment banks and hedge funds and these sorts of things create and trade all the time. And to get into the complexity a little bit, all of these assets behave really differently. They maybe pay out money differently, they maybe are priced differently, they may have different life cycles, right? A lot of these assets sort of have a life cycle where maybe payments are made out or different sort of conditions might be hit. You can sort of execute an option, you can do these sorts of things, and all of the assets that we have operate differently, and that means really complex data. As I said before, we have different regulatory regimes, different rules that we have to follow for trading, in which we have to make sure to report for our clients. The scale that we operate about sort of across our clients is in the millions of transactions per day. So you can sort of maybe use that as sort of a baseline for what sort of traffic in general, like one kind of like flow of traffic, right? And this isn't super high throughput in general. I think the thing to understand is that what we're doing here is scaling with premium support, right? This traffic is extremely critical traffic. These are trades. We have to do a lot more work to make sure that we can actually scale while also hitting very stringent guarantees on every single trade message that we're processing through our system. And finally, just to give you an idea of sort of where we stand as a business, our impact on our buy-side system, AIM, has over $17 trillion in assets under management, which is as huge as it sounds. It's really quite interesting to see the scope at some points. And our sell-side system, TOMS, there's this Waters Technology publishes this sort of best sell-side system award every year, and they have won it 11 of the last 12 years. So, and of course, our challenge as engineers is to continue to deliver this high quality level of service to our clients. Now to talk maybe a bit more about the system from the engineering side, what sort of problems we face, and as we'll soon get into, how we use RabbitMQ to address some of these problems. So some of the broad requirements. As I've already sort of referred to, we obviously need to have very high reliability. We target 0 message loss in our system, right? And so you can imagine that all the systems that we use, we heavily leverage distributed systems sort of in every parts of our pipeline, and we need to sort of have a really extreme redundancy and failure scenarios and the ability to recover from all sorts of scenarios. Because again, these are trades. If the trade doesn't go through, if the message gets lost, that's potentially millions of dollars, well, who knows how much money could be lost from that one particular message, right? And if it doesn't actually go through and the price ends up changing. So we have to deliver really high guarantees in terms of reliability. One really interesting requirement that we tend to have is message ordering. As I said, trades have life cycles. They have a lot of events that happen. A compliance check goes through. Maybe sometimes amounts get changed, these sorts of things. It's very important that these events come in, are processed in the order that they're sent in, so that the sort of state transitions and that the state of the trade remains correct. You wouldn't want the amount of the trade, because things going out of order, to end up messing it with the final amount of the trade. Maybe the order ends up going in for the wrong, some wrong amount of maybe the number of bonds that you want to buy, for instance. That could really, again, cause a lot of loss. Let's see. Secondly, in our Bloomberg trading systems, we have really high requirements on the levels of isolation that we must provide for our resources. So for instance, something that I at least haven't really seen in other places is that we have multiple levels of production tiers that are isolated from one another. So there's not just prod, there's several different prods, right? Which we sort of serve different clients from different prod environments, but all are actual productions. And so we have to figure out how to sort of manage and maintain these isolated prod tiers from each other. Secondly, we have truly massive sharding of our resources and processing. And this goes for our databases, for our messaging resources, for our services, in order to have data isolation and isolation of our technology so that if there's some problem with some particular process, maybe if some client is doing some really weird behavior, some weird transactions, they're sending in just tons and tons and tons of trades, we want to have a sort of limited blast radius for how much that bad behavior could possibly impact other clients. So I'll get a little bit more into kind of what this means and what sort of scale we're talking about here later, but just that's one of the problems we have to have is a truly massive level of sharding. And finally, we do have growth of different kinds. We, just like most businesses, we have a lot of ways which we need to grow the system, both from sort of natural events happening and from how we are sort of structuring our processes differently. We're an old business. We started in the 90s, but obviously, these days, in order to keep up with the scale, in order to keep up with the business, and also to have a well-engineered system, we prefer service-based async processing pipelines. We have to make sure that those run efficiently. And secondly, we have, and this is actually something that I saw like even just this week, is that we have a lot of problems with steadily increasing traffic, especially because we were originally designed as a UI-based workflow. All trades were sort of entered on a screen by an actual person, putting it in. We're moving towards more sort of programmatic access, right? Big banks will just send us thousands and thousands of trades across these electronic feeds, right? So now the fun part. I wanted to say this, but just to give you an idea of scale, in terms of actual throughput, we're not massive. Because trading data is still not sort of as massive as you would think. Our average inbound rate of messages sort of across our system is about 1,500, over 1,500 messages per second. The peaks, we have a lot of bursty behavior though. So our peaks, which happen quite frequently, are more around 40,000 messages per second. And and just because like this RabbitMQ, I think you probably all understand inbound rate, outbound rate is different. Our outbound rate tends to be about double. So there might be like a 2 times replication factor in terms of how many messages go out. So next, this is what I really wanted to get to. How do we leverage RabbitMQ in these systems specifically? I'm going to talk a little bit through why RabbitMQ works for us specifically, and then I'll actually walk through a use case and show some of the interesting features more in detail. So first, it's a good fit with our system's behavior. Maybe you can already tell we have pretty sparse and bursty traffic. We don't have a need for a massive throughput system, but we do need to be able to have sort of persistence and handle that. As I said before, we have need for really strong guarantees from whatever messaging systems that we provide because we want no message loss. As you will see, especially from the example that I'll show, we have some pretty complex consumption patterns throughout our system. And we also have well-defined separated business functions, which kind of nicely align with separating resource by vhost. Secondly, we leverage flexible resource management, and this is something I think that comes from using the Erlang VM. It's very easy to run multiple brokers per physical cluster to scale really easily from the machinery that we have. And there are a lot of different options for how we can shard our data. As I said, we have massive sharding requirements. So let's go through the example. This is the fun part, right? This is a real example. This is how our main trade entry system works for the sell-side system. So this is when a client sends us trade data, whether it's from a UI or sort of electronically, this system, which heavily leverages RabbitMQ, is what processes that data, puts it into our databases, and triggers all of the outbound systems. So starting at the top, we have the systems that actually feed in the trade data. So they may be maybe backends for UIs. They may be, so we have different UIs for different sort of asset classes. We may have just a generalized inbound trade feed, which could be for every sort of asset that you might see, different kinds of securities. So these come in, they basically fill, so any yellow errors that you see here, this is all RabbitMQ in our system. So these services may send in messages through RabbitMQ towards a dispatcher. And the role of this dispatcher is ultimately to route to the correct kind of service, which I called them here bookers, but the way to think of what a booker does is it just sort of enriches and persists the trades, right? So once the trade is sort of in the database and has triggered a bunch of downstream processes, you can consider it booked or sort of active, right? So the dispatcher will receive the incoming trade data. It will maybe look and see, oh, this is a bond, this is an equity. Based on these things, I'm going to route it to these different trade bookers. And again, using RabbitMQ. And the final step is once the booker has either successfully booked the trade or maybe there's even an error, it must report its status back to the UI. So you can have some nice screen saying, hey, your trade has succeeded, or there's been some sort of problem. Maybe refer to this other screen to see it or retry or something like that, right? So I wanted to give you just a basic rundown of this and then maybe talk through some of the particular RabbitMQ features that we've used to actually support this workflow. First of all, at the very top, the high reliability, right? If you use, so there's a couple of things that we do. First of all, reject publish as our vhost policy, right? So by default, the overflow policy for a queue in RabbitMQ, if a message comes in and it's already full, is at I think it's like drop head. And you know, if that happens, there's none of the services which are interacting with the queue are actually aware that this message has been dropped. There's actually been message loss. That is not acceptable for our system, but luckily RabbitMQ provides the reject publish behavior for this. Secondly, broker confirms. Always use publisher confirms, right? Every part of our system, we consistently enforce that you know, every publish must be conformed. In fact, in general, we use synchronous publishing in our clients just to sort of be doubly sure that, number one, the message has been persisted, and number two, that also helps with our ordering requirements. Secondly, the publisher and consumer separation is extremely valuable, especially in this case. So you can tell these UI services, the ones that are feeding data in, they have some particular business logic for their particular asset class. Maybe they're just worrying about processing the feeds and the data coming in from the client. Either way, they don't need to worry about what happens later, right? Because we have this architecture that's made very easy by RabbitMQ with the dispatcher and the bookers, they're not worrying about routing. They don't have any of that business logic baked into it. A lot of that is handled by the RabbitMQ system here. And that brings me to sort of the final thing here is RabbitMQ makes all of this business of routing very easy, right? Think of all the data coming in from the feeds, from the circle on the far right. This needs to kind of be categorized and sent to the right booker. But the only business logic that we have in the dispatcher to do it is basically to look at the security, figure out what worker should this go to, what asset class is it, and then it uses different routing keys and just sticks it on the message and sends it to the same exchange in RabbitMQ. And lastly, two other things I wanted to say is that this, as you can imagine, this booker process is kind of a critical process. Sometimes it can be kind of slow. Certain asset classes might be more difficult to book than others. But we leverage priority, and I say priority queues. I think that's actually a typo. It should probably be priority messages. But we leverage message priority in order to process sort of either really important messages, maybe those coming in from the UI. It's more important to be able to get that done quicker than it is to get the sort of electronic feeds done quicker. So we use message priority in order to leverage that feature. And finally, for this reply back to the consumers, we do actually use reply to queues for those as well. I just think that this is a cool use case because it really showcases, all of these features end up making our applications much simpler. And that's one of the benefits of the heavier broker. This is live, by the way. This has been live for years in production. So this is a real use case I just wanted to share with y'all. So I'm going to use this slide to kind of to shift into the second part of the presentation, but I'm going to do that by talking about sort of giving you a better perspective on the problems that we face here. So to start with, this is maybe simplified. This is just a publisher-consumer pair. This is just a very simple workflow. You can imagine one publisher, an exchange, a queue, a consumer. This is probably very familiar to all of y'all. So I was kind of drawing the diagram and the diagram in the previous slide, something like this, right? Just showing, different circles and boxes have their individual sort of purposes. But I was a little bit lying to you. This does not really reflect how our system must run, because we have sharding. Kind of like I was explaining before, we massively shard all of our services and all of our resources. So whenever I have a drawing like this, imagine that we're actually talking about multiple publishers, multiple queues, and multiple consumers serving the same business purpose here. And I know that I only sort of have a factor of 3 sharding here, but it's actually hundreds of shards. So you may have hundreds of queues per use case, hundreds of publishers, hundreds of consumers, right? So this is sort of bringing it to the next level in terms of resource management. And not only that, remember I said we have multiple production environments. So we're talking about these hundreds of queues and hundreds of consumers and everything. These resources apply for each of our production environments. And we have several different production environments where we need to coordinate and manage all of these resources. These are some of the more unique problems that we face in our trading systems, and that brings me to sort of how we have started to solve those. And it is through a system that we have for managing externalized application configuration. So in a sentence, rather than having all of the information about the topology and about the connection and about everything that the application, how the application interacts with the broker in the application itself and deployed along with the application, we have it managed in an externalized system, from which the application fetches the information and drives all of its usage of the RabbitMQ resources. I'm going to explain this in more detail in later slides, so that's just the sort of top-level sentence here. But let's get into it, right? What were the motivations? So originally, our motivations were interesting. We thought, first question really was, what if we want to move away from RabbitMQ? We thought that there would be some use to sort of abstracting away the particular details of, how we were using resources and what we were doing, and try to simplify things. Say, basically, you're publishing or consuming messages. Let's not hard code that information about RabbitMQ into the application. Let's put that into an external system. We also wanted to have some control of the topology outside of the code. We wanted the ability to make changes to what was happening on the broker without having to actually change something in an application, rebuild, redeploy, go through that whole process. We wanted it to be config-driven. And finally, my team was trying to figure out what are we going to do with this intern, and that intern was me. Actually, this is in 2015, and I'm not kidding. This was my internship with Bloomberg, was literally to build this very system. So we're coming full circle. 7 years later, I'm giving a talk about it, so I think that's pretty cool. But some things that we didn't realize at the time that we ended up discovering were that we could solve those problems of sharding, of the multiple production tiers, of this complex resource management much more easily with the system that we ended up building. We didn't realize how commonly we would need to do fairly huge mass migrations of the application behavior. So having it all externalized made it much easier to do across our entire organization. And finally, I hope this is final, but we are able to do much more granular tracking and resource management. Just happens to be at Bloomberg, the way that we sort of track RabbitMQ resources all scoped to the vhost level. It was very useful to us to capture this information about what queues you're using, what exchanges are you using, what are your sort of consumption patterns here, and we could use that to get some really interesting insights into our system. Right, so now we get to the fun part. How do we actually build the system? It's a fairly simple idea. So first, we just manage the configuration in a fairly straightforward way. Just imagine you have some full stack application. The config is stored in a database. Maybe you make a nice UI for it. This, of course, evolved over the years. And everything that I'll have in this slide actually has, every detail has evolved over the years. So, imagine this being built however you want. Today, it's a web application, but so you can sort of imagine it that way. So you manage the config itself on the web application. And then you use the application to produce config artifacts, right? So the config is stored in the database only for management purposes. What actually drives the application behavior are these config artifacts. And again, these could be sort of in a multiple of different formats. Let's just think of them as just JSON objects that applications get somehow, right? Then we put those config artifacts using sort of standard company-specific deployment and artifact management tools. You need to get them into the runtime environment, wherever your application is running, right? And then the application, which uses sort of a library that my team built, which actually the config drives the behavior of the library to establish a connection with the broker, to manage the resources and all this sort of thing, ultimately giving you the connection to the RabbitMQ broker, right? This is the basic model. So you can see that it's kind of decoupled, but what you have in the end is an application which is fairly simplified, which is just reading the configuration. It sort of has just a reference to the config, and the library that we provide drives all the behavior which actually interacts with RabbitMQ. And I wanted to give you an example. This is pretty much exactly what our config looks like that we deploy. So, like I said, and I don't know how well you can. It's not even up right now. All right, well, it will come up in a second, I hope, but essentially, it is, here we go, yep, so it is a JSON object, right? Think of it as a JSON object. And I'm gonna kind of blow out these different sections and show how our client will actually run through this configuration and drive this sort of behavior with the resources. So first thing is first is we called it an endpoint. I did not know at the time when I was an intern that endpoint is like the most overloaded term in general in the industry, but that's what I called it, right? So, this is sort of the generalized reference or ID for this particular interaction between the application and the broker itself. Next is the connection section. So the first thing that our client will do, our library, is read the connection details. What's the connection string? What's the vhost that I need to connect to? What's the port? You have all this information in here. It uses it to establish a connection with the broker, to do the handshake, all of that great kind of stuff. Next, let's say, and as you can see from the endpoint, this is a consumer. So, the next thing that it does is declare the bindings. So in order to actually establish a consumer, you must, the exchanges. So we must set up all of this sort of exchange resources on the broker in order to, connect the queue and everything. So we declare, you may have a whole list of exchanges here, including even the dead letter exchanges that are needed in case you're using that feature for your queue. So, our library will then go through this list and declare each exchange. Next, the queue itself, of course. So, and just like everything else, you sort of have all the queue information here, including all of the properties. What is the dead letter routing key? What's the dead letter exchange? You can have a TTL, all that great stuff. It declares the queue. And of course, finally, it sets up the bindings, right? Same thing, and you can sort of have as many bindings as you want in whatever formats you want. The library runs through them, declares all the bindings. At this point, you're good to go, right? You have your channel, you're connected to the queue, you're up and running and listening. The application didn't have to do any of this, right? Since it's all config-driven, our client is able to just read through this information, set up the resources that it needs for that application. So now I want to go through just a couple of use cases where we've really found this system to be very valuable. And these are all real. These have happened, right? So first case is if you need to change the connection strings. So let's say you just have a service. It's directly connecting to the broker. Maybe it's using some DNS string or something like that to resolve the right IP address that it needs to connect to. Your connection section might look something like this. You might have some host name, some connection string that's just like a direct DNS connection. But, and I'm not sure if some of y'all have seen some of the other past talks that Bloomberg has given before, but we've developed a proxy for managing connections, which gives us a whole lot of other benefits, and which is also, by the way, open source. So be sure to look that up. But let's say that you want to sort of change we're changing how we manage connections at Bloomberg. We want everything to go through proxies because that's sort of what our upgrade strategy and various other things use. So you need to change something, right? It can't just connect directly to the broker. And so for us, this was a very easy thing to do. You can just change the connection string in the configuration, right? There's no need to go to all of these maybe potentially hundreds of applications that are using this configuration to go in and change their code. There's no change required at all on their side. We were able to just go and change sort of these hundreds of usages of RabbitMQ and update the connection string, deploy it. No work required at all from the application teams. Pretty good, right? I think we've probably all done mass migrations like that before, and this one was very easy. That was huge. Secondly, this is an interesting one that I really did not foresee until it actually happened once again, but this config really gives you the ability to add and remove steps from a pipeline. So let's say that you have a really basic interaction between two services here, and let's say that they do it through some exchange named exchange1. If you look at the endpoint config, there'll be something in here saying, well, such and such endpoint uses exchange1, and it would have that exchange information in there and everything. But let's say that you wanted to introduce an extra step in that pipeline. Maybe this is like an event store. It's just persisting events for some reason. It doesn't change anything, so it can be put directly in between these two services in the pipeline without interrupting other things and without otherwise needing to change the code of the services. All you need to do for this is, well, first, create configuration for service C, change a few things there. Service B doesn't have to change anything. It's still listening to the same queue. But for service A, all you can do is just change the exchange that this endpoint is referring to. Since it's config-driven, you make the config change. Next time the application loads into config and runs through that whole process, it'll use the different exchange. No code change needed. And this did actually happen, by the way, but then let's say you want to take out that step, you realize you don't actually need the event store or something like that, you can just do the same change in reverse. Just change it back to exchange1. So finally, and I'm just going to give sort of like a snippet here. This is my favorite use case, even though I think there's a lot more that could be done. But you can leverage this centralized data. Since you have this application, you have one place where you know all of this topology information. You can now leverage that in a bunch of different ways. One way that I think is really valuable is you can visualize it, right? Since all this information is not sort of spread out in all the applications. It's not buried in each different project's source code. It's centralized, so you can actually collect that and use it to see what does my topology actually look like. You can visualize it. And this is a real example, by the way. This is just an example from one of our vhosts where you can see, oh yeah, there's these 3 publishers publishing, and the red circle, it's gone for a minute, but the red circle is essentially an exchange, and you can see, therefore, that there are 2, and the green circles are consumers, so what you'll see is that there's 3 publishers publishing and 2 consumers consuming this kind of data. And you can even imagine how you can make it more, you can add more information in there, you could add other kinds of steps and objects. And once it comes back, I'll show you the really cool one. There we go. This one is real too. This is from a much more complex topology that we host, which probably will flash up again. It's very teasing, isn't it? But this can be really useful whenever you have really complex topologies, a lot of different services and a lot of different queues, exchanges, and things to visualize. It's much, much easier to understand if you actually can draw a graph of it. And this is all driven from our config data that we store and manage in our database. All right, it's not a big deal, by the way, because this next slide is just sort of text. I just wanted to sort of, I'll go through these really quickly because I want to have time for a couple of questions. But first thing we want to do is move this even more towards a true SaaS offering, right? Like that's kind of how we view it. It's resource management, right? It's a little right now disconnected from the actual provisioning system that we use to say set up vhosts, that sort of thing. We want to connect it much more closely with that. Secondly, we want to have tighter lifecycle management of all these resources. with all the shards themselves kind of have really complex life cycles where they can move around, they can come up and down, that sort of thing, and we want to improve that. The second sort of category is that because we have all this data centralized and collected, we can actually connect the live data from the brokers. We can sort of know what actually is going on in the broker and use that against the configuration that we have to get some really key insights about what's happening, what's going on in our system. I think it can be really powerful if it's not just sort of static information about the config, but it can be really live. We can detect inconsistencies, maybe find dead config, maybe find someone who's using the system without using the config, that sort of thing. This is my favorite, is that you can also maybe better apply metrics using the actual live data. You know more about your traffic, so you can inform your users, hey, if you're creating this queue with these properties, this is how much it's actually going to cost, right? And that can be driven by live data. And of course, as I said, it's kind of my favorite. We could do more and improve topology visualization. Maybe you could even make it interactive, right? You could click on the circles, you could get information. Maybe you can even use that to change different things. I just think that'd be really cool. So that's it. Thank you very much for coming here today and going through this with me. Just a quick shout out that you can go to bloomberg.com/careers if you have any interest in Bloomberg in general. And this link here is for a particular job posting, literally for working on this system itself. So also feel free to reach out to me or my colleagues at Bloomberg, and thank you all for joining me today.
Thank you, Andrew, as well. So do we have any questions?
I have a couple of questions for you, Andrew. Thank you very much for sharing your experience with RabbitMQ in your firm. I have a couple of questions. First is, what technology or how did you create those visualizations of topology? And secondly, have you been able to solve the problem of knowing the number of messages flowing through your clusters or the size of those in totality, right, to have a complete view?
Good questions. To your first question, it's some library. I mean, the front end that we have there is just React, and I know that it's some library for graph visualization that we found. We're able to we just built the code to build the graph from our config information, and then essentially we're able to plug it into this library. I don't remember the particular library, but I can find you later and I can get you the answers to that. To your second question, that's a problem that I would say that we actually haven't solved too well. I mean, aside from the fact that we do have we have information about sort of the throughput, of course, and we have a lot of metrics on that level, but message sizing, I think that, well, thanks to our core RabbitMQ team, we do actually have information about, for instance, like average message size and whatnot. But I will say that in our particular case, because we're such a focused sort of use case, it's all order management systems, and so we understand the data that we're passing around really, really well. So we do just happen to sort of understand what our message sizes are extremely well. Like I just know off the top of my head, about what to expect from that. You may want to talk to our RabbitMQ team in particular about how they figured out how to sort of track and calculate the average message size for across vhosts and clusters. So.
Yeah, we have a question online as well. So, this system, did you think about using it with other messaging solutions, so not RabbitMQ?
Great question. It's almost like it was planted, and I think some people are laughing over here because we actually use almost the same sort of thing for Kafka as well. Because we have the same problems for Kafka. People in our systems want to use Kafka also. And so the same website that we host and manage all this RabbitMQ config, we also host and manage Kafka config.
Hi. So, first of all, thanks for the nice presentation. The question I do have is, as you mentioned, it is a trading platform system. I think it is required highly available solution all the time.
Yes.
So how you are managing the disaster recovery?
Disaster recovery of what? Of the RabbitMQ
RabbitMQ clusters and brokers.
So though, I would also maybe defer to some extent to our core team to answer. So like Adam or Will, if you see us around, then you can. There's a bunch of Bloomberg people. I mean, I will say that we do have a team fully supporting it. It's fully managed, and I know that they work a lot on the what's it called, like healing strategies for split brain problems. Just in Bloomberg in general, we do a lot of testing. We'll sometimes like take out a data, obviously in a test environment, but we'll sort of turn off a data center or simulate connection problems in order to ensure that all the policies and management of our brokers that we have is still healthy. But yeah, I would definitely defer to the professionals to give you a full answer to that.
Do we have any questions on this side? No. Okay.
I'll go for the second time. Right, so you mentioned Kafka, which is very interesting, and we are from JP Morgan, we have kind of similar challenges, right? So from your experience, what are the use cases where your organization prefers to use Kafka, and what are the use cases where you prefer to use Rabbit?
Yeah, you should talk to my colleague Alan about this as well afterwards, but I'll give you a few answers. So one clear case is in situations of truly massive fan out. So for some of the sort of main trade feeds where a bunch of downstream systems need to subscribe to all the trade events coming through, RabbitMQ doesn't handle massive fan out as well. It hurts performance. Whereas with Kafka, it's all just about managing offsets, right? It's the same sort of topic stream. And so in those sort of situations, oftentimes you may prefer to use Kafka. There's actually a lot of questions, I will say, about, today, because Kafka also has retention period and streams as well, that has generally been one of the use cases that we prefer Kafka for if you need to be able to replay events, that sort of thing. We're actually having a lot of internal discussion about whether the game is changing now because of RabbitMQ streams. Those are just a couple of differentiators that I'll give.
Okay, thank you. I think we have time for one last question from online, and the question is: what were the strategies used to scale having to maintain the message ordering? Oh,
yeah, that's one of my favorite. I wish I had you have to be kind of harsh with your presentations here, but message ordering is one of the most interesting ones. So I think I mentioned it, but number one, in general, we recommend all of our clients to use synchronous publishing in general. You can do it, but it's very hard to achieve message ordering with async publishers. So handling the confirms asynchronously. So in general, we do recommend synchronous publishing at least. Whenever you need to scale more, actually we sometimes have used consistent hash exchanges as well. And that can also lead to some pretty interesting topologies because we may often need to do layers of routing. So we may do exchange to exchange bindings and stuff ultimately to a consistent hash exchange. And then you just need to sort of say you can hash on, say, the security ID just to make sure that ordering is consistent with it within the same security or maybe within the same trade. Just like any other scaling problem, I think that the most important question, and in the context of ordering, you need to answer the question, ordering within what, right? It doesn't have to be absolute universal ordering. It just has to be ordering within whatever context it's important to maintain and guarantee ordering. So those are some of the RabbitMQ technologies and strategies we've used at the very least. One last thing is, of course, you can't have multiple workers in the same queue and maintain message ordering. So that's why I guess I originally said you would use consistent hash exchange. You can have multiple different queues and still kind of do a worker mode in that particular way. But yeah.
Okay, thank you, Andrew. Please give a big applause for Andrew. And